Okay. All right. The recording has started. Let's start the lecture. Today's lecture is going to be all about the chapter number 3 within your book, within your Kaplan book, but we don't study it from the book again. We study it fully from the notes as well, because within the book, there are almost 20 different pages, whereas within my notes, I have summarized the whole chapter in just 3 pages. That's it. That's all you need to know to pass the question that will be asked from you regarding CCG, and that is it. Nothing else is asked within the exam. So what is CCG overall? Code of Corporate Governance. If you remember your FBT exam, or even if you're not from ACCA, you might know that what CCG is on a basic level, you know. Basically, CCG tells us how to run a company. That is what CCG is, how to run a company. A CCG tells us a company that is owned by shareholders, that is owned by many different shareholders, is a company, and it is a listed company. The shareholders would not be able to work within the company. They cannot hold any position within the company. They can't be a non-executive director. They can't be an executive director. They cannot be a director. They cannot be a manager. They can't be a junior employee. They can't do anything. Okay. So because of that, CCG was born. Because if the shareholders are not running the company, because they own the company, if the person who does not, if a person who owns the company and is not running the company, who can run the company within their best interest? The question is, you can hire me to run the company. You can hire Omi to run the company. You can hire any of my F8 students to run the company. But how can you make sure that that person who you have hired to run the company, he will have the same type of motivation, he will have the same type of encouragement to make as much profits as you wanted to make, because it is not his company. He can even just close your business as being the CEO and then get off, run off with your money. That is the problem. You can't trust anyone. So CCG came in. CCG was developed by basically the UK's law. The UK's parliament sat together one day and they had a big voting within the parliament. And then they hired individuals who are experts in the field of running businesses. They hired them. It is a very, very old thing, like 1910s, 1920s story. They hired them, and then all of those people sat around and discussed one specific agenda, that if the shareholders are not running the company, we need to develop a design that the company will be run within the best interest of those shareholders, because they are not running the company. Their goal is to make a lot of profits. So we need to hire people. We need to create a design. We need to create a, you can say, a diagram of the organization in which the people would be working in with the same encouragement and the level of same motivation to make as much profits as the shareholders would have made. All right, that is when CCG was born. Now what is CCG at a whole level? CCG tells us how do you run a company, and that is it. How do you run a company? Now, to give a brief understanding of CCG, let's come towards the basic understanding of CCG. CCG says that because shareholders are not running the company, once every single year, shareholders are going to come together and they are going to select a bunch of people, either 7, 8, 9, 10 maximum. There is no maximum number, but they are going to select a bunch of people who are very experienced in running a businesses. They are very big people. They have been paid high amount of salaries, but now they don't want salaries anymore. They are very rich. They do not care about the money, but they know how to run a business. You need to give them a goal. So shareholders come together and they nominate people. Those nomination can be anyone. They can be anyone. He can be a doctor. He can be a government employee. He can be me. He can be you. He can be any student. But you need to have a PR to be able to be in the minds of any kind of shareholder. You need to have a lot of PR, a lot of experiences. Only then shareholders will get to know, oh, this person is also very good to run a business. So every single shareholder will have many different people within in mind who I want to choose to run my company. Now, there is not just one shareholder. There are thousands of different shareholders of that company. So thousands of those different shareholders will come together. They will first select 100 people. Oh, these are the ones who we are going to vote for. Out of those 100 nominations, 7, 8, 10 different people would be selected. And those people that the shareholders select, those are known as the NEDs, the non-executive directors of the company. The non-executives directors of the company. These non-executive directors have been selected and hired by the shareholders to run their company specifically. That is their only job. Now, remember this. These non-executive directors are not 10-year-old babies. They are not 20-year-old teenagers. They are not 30-year-old 30-year-old people. They are not 40-year-old. They are very old aged. They might be 60, 61, 62, 52, 55. They are above 50 because they have a lot of experience in running businesses. So they have a lot of high number of ages. So they can't go and run the company now. They can't just go and start the production of the cars and one NED is working within, let's suppose 10 NEDs have been selected by the shareholders. One NED is making the cars, one NED is coloring the cars, one NED is fitting the seats inside the car, one NED is going out to the public and selling the car. No, they can't do that. They can't do that. They just don't want to do that. They have worked their whole lives. Why would they do that now? So they want to just sit in a room and decide about the future of the company, because once you have a lot of time to sit down, you can think clearly what the company has to be. So these are those people, the people who just sit down and plan. That's it. That's it. So they can't run the company now. There needs to be someone who has to run the company. The shareholders, by selecting the NADs, have given them power to run the company. Now they can run the company as they want to run the company. What are they going to do? These non-executive directors further go on and hire people who are known as executive directors, the EDs, the executive director, the executive directors. These are hired by the non-executive directors. And what is the responsibility of an executive director? Let's come towards that.
The day-to-day responsibility of the company.
Yes, but let's come towards the basic first of all. We are not going to move towards directly jump towards they have to run the company day to day. Obviously, they can't as well run the company day to day. They also have a lot of experience. The executive directors also have a lot of experience, not as much as the non-executive directors, but they still have a lot of experience. Why would they go and start production? Why would they go and do this? They need to have control because they have experience. They know how to run a company. So they must be given control. They must not be doing the company. They must not be doing the work on their own. They again need to have control over people. So we from FBT know that a company is divided into different departments. There is a production department, there is a marketing department, there is a let's say a finance department, there is a sales department, there is a coloring department, there is a purchasing, which is known as a procurement department, there is an R&D department, research and development department. There are many different departments, right? So the non-executive directors do one thing. The non-executive directors select executive directors. And now how many executive directors would be selected? As much departments there are within the company, for each department, there would be selected one person who would run that department. And that person again is known as the executive director. So one executive director would be hired by the non-executive directors for the production department. One executive director would be hired for the for the marketing, one for sales, one for finance, one for procurement, one for each and every single department. Now the executive directors have been selected, but the non-executive directors are also going to do one extra thing. They are going to hire, let's say, 5 different executive directors for 5 different departments. Each department now has their own executive director. Now, the non-executive director do not have enough time to manage every single executive director and tell him how you have to run this company, how you have to run this department that you have been given. There should be there should be a bit of coordination, a bit of communication, a bit of discussions within the executive director. They should know on their own that we have to do this, we have to do this. Non-executive director are a group of 10 people who can't just go ahead and manage group of 5 people. They have to plan. They don't have the time. So non-executive directors also hire the CEO of the company, the chief executive. They also hire the CEO of the company. And this CEO is again an executive director, but he is on top of all the other executive directors. He is not just running any single department. He is running every single company. Every single department is run by the CEO. He is responsible for every single department. How? By controlling the executive directors, which have been hired by the non-executive directors. So understand this.
I thought the CEO was the owner of the company.
No, CEO is not the owner of the company. He will never be the owner of a company. Basically, Omi, if you start a business tomorrow, any of my students who start a business tomorrow, you would be known as the CEO of this company and you would be owner of your company. But companies that are publicly listed, companies that have upon thousands of investors and shareholders, one owner cannot be chosen to run the company. Understand why? Because then he would run the company for his own benefit. The remaining shareholders have been kicked out by him. He is the boss. Every single shareholder on the every single year is going to come again. Oh, he was running the company, now it's my turn. Then there would be a bit of hassle. The company would not be run properly. So an independent person is chosen as the CEO. They are paid huge bucks. They are paid lots of money. Helicopters are bought for them by big companies. Houses are bought for them. Lands are bought for them. Cars are given by the company to the executive directors, and all the luxuries that you can dream of, every single luxury is given to these executive directors. All right, let's not come toward non-executive director right now, but understand this. The shareholders had power over the company. This power was given by the shareholders to the non-executive director. Now the power has been shifted to the non-executive director. And out of 100% power that was received by the non-executive director, some power was distributed to the CEO, and then further CEO divided some power to the executive directors of the departments. Do you understand this concept? The power
Wait.
is not now being divided between different people.
Wait. You said the shareholders give 100% power to the non-executive directors, and they give some power to the CEO, which also divides power between the other people.
Yes.
Okay.
But now the question is very simple. If the shareholders have given away all the power to the non-executive directors, and non-executives have given the power to CEO has given the power to all the executive directors, they can all just combine. These people can all just make up a team and start looting the company, start looting their assets, start taking the laptops of the company to their home, start taking the cars of the company to their home, start stealing the money of the company that the shareholders have invested within the company. So what happens is this. What happens, there is a strategic way divided for this control to be monitored as well, for this power to be monitored as well. What happens is this: all the executive directors report directly to the CEO, back to the CEO. So this means any executive director who is doing something wrong, the CEO is going to punish him for that. But again, what if the CEO is doing something wrong? The CEO is directly reportable to all the non-executive directors. So all the 10 non-executive directors are going to call the CEO one day and slash him. They are going to say, you did this wrong. So again, the CEO is also being monitored by the non-executive director. But what if the non-executive...
Our question.
Yes, come again.
Since the shareholders give 100% power to the non-executive director, so how can they hold them accountable?
Yes. Let's come to... I'm going to come towards that. What if one day the non-executive directors decide, oh, we have all the power. What if we start looting the company? No one can stop us, right? They can also do that. There is a, you can say there is a direction within the human being psychology that if they are not being monitored, they would do everything wrong, everything right. Because what they are, you can say, suspicious. They are, you can say they want to try out new things. So a human being will eventually do something wrong. So you need to monitor them as well. It is the company of the shareholders. They need to know whether the company is being run properly or not. So even the non-executive directors cannot be trusted properly. So what happens is this: the shareholders have the power. Now remember this: all the decisions within the company are being taken by the non-executive directors. All the big decisions are being taken by the non-executive directors. Okay. All the big decisions. For example, a decision that we used to sell iPhone, Apple's decision was that we used to sell iPhone. From the next year, we are not going to sell any iPhone. What if Apple took this decision from next year? Non-executive directors have decided that from next year, Apple is not going to sell any kind of iPhone anymore. Now, is this a good decision or a bad decision? This is a very bad decision. The non-executive directors have taken this decision. Is there anyone to stop them? Well, what I have taught you up till now, there is no one there to stop them. But yes, there is. The shareholders all can come together at any time whenever they think that the decision that is being taken by non-executive director, it is not correct. They can come together and through voting, they can stop that decision. Remember this. Any single time shareholders come together, their decision would be decided by the vote. There are many different shareholders, thousands of shareholders. One shareholder would be saying one thing, the other would be saying the other thing. So there would be thousands of decisions eventually that shareholders can take. But one decision would be chosen eventually through voting. The decision of the shareholders combined that gets the most votes would be the decision. For example, the non-executives are taking this wrong decision. The shareholders are going to come together and say, we are stopping this decision of the non-executive directors. Who would like to agree with us? All the shareholders would say this. All the shareholders are going to vote yes, no, yes, no, yes, no. Majority vote would say, yes, we need to stop this decision. If this wins, this decision cannot be then taken by the non-executive directors
Is it like
anymore.
for every is it like for every decision, or it's just when they're against it?
It is for every decision. It is for every decision. Every single decision that the non-executive take, the shareholders can come in and stop that decision whenever they want. Okay. And they can also bring in new initiatives. The shareholder can bring in new initiatives. For example, there is right now a huge demand and market for, let's say, these types of power banks. You know what a power bank is? These types of power banks. There is a huge demand. Apple does not have this type of a power bank. The non-executive directors are saying, oh, we don't want to focus upon it, let it go. Shareholders say, you can make huge profits for us by selling these power banks from your own brand, from Apple brand for $1,000 each, a huge, beautiful power bank. The shareholders again come together and say, okay, the non-executive directors have not taken this decision, but we have to vote upon this decision. Should we sell this power bank? Should the non-executive directors make this decision and yes, sell this power bank? Yes, they should. The shareholders have decided it. Now, whatever the case is, the non-executive directors have to make this decision and say, yes, we are going to do it. Understood?
Mhm. Yes.
Any questions?
No.
Great, great. Now let's come towards another basic thing. Let's come towards another basic thing within the, let's say within the CCG. Now you understand all the concept of non-executive directors and executive directors, each and everything. But the basic things that are very important for the exam is something that you must remember. I have written these within the notes. We are going to come towards the notes, but before going towards the note, you need to have the basic understanding. Let me write down NED and executive director, non-executive directors and executive director. Sorry, not like this. I'm going to write it the other way. The non-executive directors are on top of the company. Basically, there are 10 non-executive directors within the company. Remember, the first thing, the first must that there be, the CCG says that the non-executive directors must always be +1 than the executive directors. What does this statement mean? This statement means that if the total departments of the company are 10, there would be 10 executive directors and then one CEO. So a total of 11 executive directors within the company. I told you a statement that the CCG says that a company must have +1 non-executive directors. This +1 means that whatever is the total number of the executive directors, there must be +1 non-executive director. This means that the non-executive directors must be 12, at least one more than the executive directors. Understood? This is the number one criteria of CCG. You don't need to write it down because I have already written it within my notes. So you don't
Oh,
need to
I
write
was
it.
lying. Okay.
Okay, you don't need to write it down. So every single thing that I'm explaining is written within my notes. So you don't need to write anything down. Just understand it. The
Okay.
second very important criteria, the second very important criteria is that because all the executive directors and the CEO all report to the non-executive directors, the non-executive director are known as the board. They are known as the board. Instead of using the word non-executive director, they are known as the board. All right. The board means the leaders of the company. Understood? Now,
Mhm.
when there is a leader of the company, there are 10 people leading the company. Those 10 people also need a leader themselves, right?
Chairman.
A
Yeah.
team cannot work without a leader. So they also need a leader from
A
themselves.
chairperson.
So
Mhm.
these 10 non-executive directors come together and from within themselves, they will choose one person to be the leader of the board or the non-executive director. The board and non-executive director means the same thing. So they need to choose one person within themselves, not from outside the non-executive director. Within the 10 people, one people, they must choose it from themselves, that who is going to lead them. So there would eventually be 9 executive directors and 1 plus non-executive director who will be leading all of those 9 people. So a total of 10 non-executive directors. Now, this one person who is leading the board or the non-executive director is known as the chairman of the chairman of the board. Any questions?
No.
Great. Now, this is the second thing that you need to remember. Again, this is written down, so you don't need to worry about it. Okay. This is the second thing, that a chairman must be selected. Just like all the executive directors are being led by one person who is known as the CEO. Again, the non-executives also should be led by someone that is known as the chairman of the board, and the chairman would be from the inside. Understood? Let's come towards the third thing. Let me erase it first of all. Let me come towards the third thing. Let's come towards this. The non-executive director are known as the board. The non-executive director are known as the board. B-O-A-R-D, the board. Now, remember this. There are many different technical things that the board must be aware about. The CEOs and the executive directors are very busy running the company right now. They can't come to you every single day for 1 hour and explain to you that this is something new in the market. This is something else going on different. They can't do that. They have to run the company. You just need to intervene within them when they are doing something wrong. If everything is going right, you don't need to intervene within them. Okay? So the board should be able to know everything that is going on. There are 3 main issues that the board is responsible for, which fall under your own F8 syllabus. Only 3 things that you need to be aware about. There are many different things that the board has to do, but we are only going to talk about 3 things. That's it. First of all, the remuneration of the executive directors. How much salaries would they be paid? The remuneration of those executive directors. I'm just writing down R, the number 1 thing. The number 2 thing, who should be selected as the who should be selected as an executive director? The nomination of the executive director, and this is also a very important decision. Number 3, you are right now studying the concept of audit. You are studying F8 syllabus, which is known as audit. So you will be studying in the future who is an auditor. Well, you also need to know who the auditor communicates with when they are auditing the company. You also need to know that. So handling the auditor, handling their questions, the internal audit department of the company, handling them as well. It is also very important. So there is something else, the audit. That is also very important. The internal audit and the external auditor both need to be handled. That is also a very important decision. This decision is also to be taken by the non-executive directors.
I don't
Yes,
understand the last one.
the last one. The board is also responsible for 2 things, handling the internal audit department and also the external auditors. They also have to handle them. Who should be the external auditor? What if external auditor has any kind of questions? Who are they going to ask those questions from? That is also very important. So the board is responsible to handle the external auditor as well. The board is also responsible to handle the internal auditor as well. So combining the 2 audits, internal and external, number 1, audit. That is also a very important decision that the board has to take. Understood? Great. Now, for these 3 simple tasks that the board has according to the F8 syllabus, there are 3 different committees. Now, don't ask me the question right now, what is a committee? I'm going to explain it. There are 3 different committees. 3 different committees. Number 2 committee and the number 3 committee. The first committee is responsible for deciding what should be the salaries that should be paid to the executive directors. This is their responsibility. So it is known as the
Remuneration.
remuneration committee. Remuneration committee. I've written it down, so don't worry about it. The second very important thing that the board has to decide is to decide who should be selected as an executive director. They have to decide that as well. So there is again a committee for that. What is a committee? We are going to that. Please don't ask that question right now. Just understand it. They also have to decide who should be selected as an executive director. So they also have a committee for that, known as the nomination committee. Nomination committee, who has to nominate who should be the executive director. Then they have to handle all the external audit things and the internal audit things as well. So they have a committee for that as well, known as the audit committee. Understood? Any questions up till now?
No.
Now, okay, great. Now let's come towards another very important. Each of these committees, every single person, what is meant by the word committee? What is meant by the word committee? Let's come towards. For example, you live in a town called New York in USA. You live in a town called New York. There is a street named as Thompson Street, the Thompson Street. Within the Thompson Street, there are 10 different houses. There are 10 different houses. Let's say 8 different houses upon this street. This street is facing a lot of water related issues. The boring that they did is not working. When the water wells that you dig within in the ground, they are not working. The water company is not bringing water to you enough. So this street is facing a lot of water shortages. So they have to decide what they have to do. Now it can't be like that every single person is going to come in, or one house decides on their own, the other house is going to decide for them what they are going to do. No, when you have to run a whole street, you have to make big decisions. For this big decision, what is going to happen? One person from this house is going to come out, other person is going to come out of this house, the third person from this house, such as from this house. So a total of 8 people who will be representing each and every single house on that street is going to come out, and now they will decide what do we have to do. These group of 8 people who are representing the street is known as a committee who is resolving the issue of water. Understood? Any questions? Now, a committee, a group of people who is deciding what should be the salaries that have to be paid to the executive director. Nomination committee, a group of people who have been brought together who are deciding who should be selected as the executive director. The audit committee, a group of people who have been brought together to resolve all the issues of the external auditor, to select the external auditor, to monitor the internal audit, everything. That is the audit committee. Now, the important question is, who are going to be the people who will be within these committees? Again, there were how many non-executive directors within the company that we took as an example? 10 non-executive.
Okay.
Out of these 10 non-executive director, people would be selected again. They will, on these non-executive directors will decide themselves. They will decide themselves how many people should be in the remuneration committee, no matter what the number is, but they will be from the non-executive directors. There can be 3 people, there can be 4 people who in the remuneration committee, but they again would be the same non-executive director who are on the board. 4 or 3 people would be selected by from within the non-executive director, and no one from outside the company is going to select who should be within the remuneration committee. The non-executive director will do it themselves. They are going to sit down and decide, okay, you have, sir, Gohar, you have experience in deciding what salaries should be paid because you have worked for the last 40 years within HR, deciding people's salary. So you should be within remuneration committee, right? So
Okay.
who do you want to be with you? I'm going to select 3 or 4 more people with me because they also have experience, some type of experience within HR. Now, the same is the case with the nomination committee and the audit committee as well. The same is the case. People from within the non-executive directors, the board themselves will decide who of us are going to be a part of each committee. Now, you might think a person who is a part of remuneration committee cannot be a part of the nomination committee. No, that is not the case. A person who is a part of remuneration committee can also be a part of nomination committee. He can also be a part of the audit committee. Understood? So there is no pressure there that if you are a part of remuneration committee, you cannot be a part of nomination committee. No, that is not the case. You can be a part of any committee, how many number of committees you want to be. Okay. Another important question, another very important question is that just as all the executive directors are being led by one person, a single executive director who is known as the CEO, the board, that all the non-executive directors have selected a person who is their leader, the chairman. these three people who have come together to be a member of the remuneration committee, three people said we will be a part of the remuneration committee. All the non-executive director agreed. So now they three are the part of remuneration committee. They three are going to work alone. They are a team. No, a team needs a leader. That is what we studied within FBD. A team cannot work without a leader. Someone has to emerge as a leader, or someone should be appointed as a leader, or they themselves should select who should be the leader out of us three. So these three people are going to select, okay, this one person out of us, out of these three people, one person again is going to be a leader of the remuneration committee. One person out of the three people who were selected for the nomination committee, again, one person out of those three people again would be the leader of the nomination committee. One person selected, three people were selected for the audit committee. One person out of those three people again can be a leader of the audit committee. And leader of the committees also have a name, just like the chairman of the board. Leader of the committee also have a name. They are not called chairman of the committee. They are called chair of committee. Just the word chair of committee. Understood?
Yeah.
Any questions up till now?
No.
Great. I have a question. For all the remaining students who are taking this recorded lecture, the question can be answered in my WhatsApp. But specifically for you, Omi, I have a question.
Cool.
What if,
Okay.
who is the CFO, the Chief Financial Officer, who is the leader of the finance department? He is also an executive director, right?
Mm-hmm.
Great. Now I have a question from you. The CFO is part of the audit committee. Is there anything wrong with that?
Yes.
What?
He's basically responsible for the financial matters of the company. So it's like he's doing his work again. It's like one person is doing the same work twice. So
Good. So what if I say that he's a part of the nomination committee? Would that be good as well? Answer. I need an answer. Come on, hurry up.
there could be a conflict of interest. I don't think so.
They can, you are saying that they can be a part of the nomination committee because there is nothing wrong within it.
No, I didn't say that. I said there could be conflict of interest.
Okay. So
Well,
can they
no,
be a
no, no, no,
part
no.
of the
Wait, wait, wait,
nomination
wait,
committee?
wait. I want to
Yes.
say something. They
Yes.
can be a part because it's not just them who's going to get. I mean, they can be a part because there's many other people.
Well,
It's not
let me
one
tell
person.
you one thing. Let me just say one thing. Out of every single thing that we have studied within this lecture, I have told you very two important things. Very two important things. Executive directors are responsible for running the company, right? And non-executive directors are responsible for making sure that the company is being run right by the CEOs and all the executive directors. Understood? I told nowhere I said that these committees can have any executive directors. During this lecture, I just 5 to 10 minutes ago, I said that only the non-executive directors, who were 10 people selected by the shareholders, only they can be a part of the committees. No executive director can sit or can be a part within any committee. Understood? No
Yeah.
executive director, no employee of the company, no junior employee, no one except the non-executive directors can be a part of the committees. Remember this. Okay? Any questions? I'm not hearing your voice, Omi.
Oh no, no.
Great. Understood. Can we move
Yeah,
forward
yeah,
now?
yeah.
Great. Let's move forward. Let's move forward. So basically, these are all the basic things that you need to have. I have another question and I'm going to answer that myself. For example, who is the chairman? The chairman is the person who is leading the board, right? So from ever now on, when I say the word chairman, you should know who he is. The chairman is the person who is the leader of the non-executive director, or in other words, he is the one who is the chairman of the board. It means the same thing. Who is the CEO? The CEO is the person who is responsible for running the company. And how does he run the company? By controlling the executive directors of different departments, right? We know that. What if I say that one person has been selected who will also be the chairman of the board and also be the CEO of the company? This can't also happen, because again, I just said that the people sitting upon the board can only be the non-executive director. So the chairman also has to be a non-executive director. The CEO cannot be a non-executive director. The CEO
Uh,
cannot be the chairman of the board because he is not a non-executive director. Understood? This is the first thing that you need to remember. The second thing, what if I say because we were not able to find a good qualified CEO for the company, the chairman of the board said that, okay, because we are not able to find a good CEO for the company, because I am the chairman of the company, I will also be the CEO of the company and run the company as well. That cannot also be possible, because I just said during the start of this lecture that the CEO also has to be an executive director. So the roles cannot overlap. There can't be one person doing two jobs. Understood? So the chairman must be a separate person who must be a non-executive director, and the CEO must be a separate person who must be an executive director. That's it. That's all you need to understand for the basic and detailed understanding. This basically what I just said up till now. This was all the basic and detailed understanding that you need to have for CCG. But let's come towards the committees now. Let's come towards committees. The important thing for the committees. Let's talk about the remuneration committee. Remuneration committee. First of all, remember this. The committees don't make the decisions on their own. You might be confused right now because, sir, you just said that the committees decide what are the salaries to be paid, who should be selected as executive director. The committees don't decide anything. What are the committees made for? Because the three people out of the 10 non-executive directors who were selected to be in the nomination committee, basically they decide what salaries are more appropriate looking at the market for our executive directors, whether they should be given a helicopter or not, whether they should be given a private plane or not. They are going to write it down that this is what we have decided. And then when there will be a meeting of the board, all the non-executive directors are going to come together. This means that there is a meeting of the board going on right now. The remuneration committee, the three people, the three non-executive directors who were running the remuneration committee, they would also be within the board because they are also non-executive director. So now they are going to present it in front of the seven other non-executive directors that this is what we decided. What do you think? Is it correct or not? If all the non-executive directors agree, they would again do a voting upon that decision. If the majority votes agree, then that decision would be taken. This is how the committee works. This is how every single committee works. The committees don't decide on their own. The committees think, okay, this would be a good decision. They present it in front of all the non-executive directors on the board, and then the board makes the decision as a whole. There is a voting, and if the majority vote says yes, then that decision is taken. Understood?
Yep.
Great.
Kind of.
Now, yes, your question.
So that's kind of, I thought it was like, I thought they'll make their own decisions, but okay.
No, they don't make their own decisions. Remember that. Let's come towards the remuneration committee at a different level. Now, you might say there is another complexity that no one asks me in my whole teaching experience. No one has asked me this question, sir. What if the chairman of the board is also the chair of any other committee? What if the chairman, my question is, what if the chairman of the board is also the chair of a committee, the chair of committee? What if that is the case? I just said one person cannot take two roles. One person cannot take two senior roles. So a chairman of the board, even if he is within the remuneration committee, he can be within the remuneration committee because out of the 10 non-executive directors, he is also a non-executive director. So he can also say that I want to sit within remuneration committee. But because he is the chairman of the board, he cannot be a chairperson or a chair of any other committee. Remember that this as well. This is what the CCG says. I don't make the rules. The UK's government does, and we have to study it and follow it like this. Understood? Great. So from, let's say, 10 years from now, you will become like, let's say, an executive director of a big company, and you could think, okay, I've done so much in my life. I have earned so much money right now. I want to become a non-executive director, make big decisions for the company. I just want to sit alone in a room with a bunch of other of my friends who have the same experience and make big decisions for this company. And you will be like, sir, I am the chairman of the board right now. So I would also like to be the chairperson, or chairperson and chair means the same thing, the person who is leading the committee. That I would like to be the chair for the, let's say, nomination committee, because they decide who would be selected as the executive director. So then, because if I am the chair of that nomination committee, I would be able to select my cousin from Africa as the executive director. I would be able to recommend to the board that my cousin should be selected. So they might agree with me because I'm the chairman of the board. You see where this is going right now. You see, you understand the duality of the concepts, the duality of the problems, because if the chairman is also a chair of the committee, then he would make a decision as the chair of the committee. He would present it to the board. He is the chairman of the board. All the non-executive
Oh,
directors
I
can
get
still
it.
vote that the chairman is wrong, but he is the chairman. All the non-executive directors within the board would say, okay, the chairman can never be wrong. We selected him as the leader. So we should say it's okay. Yes, sir, we agree with you. We are voting. Yes, you should bring in your cousin from Africa and make him the executive director within this company. I'm not saying that there is anything wrong from appointing your cousin. I'm saying that you become biased now. You would select your cousin even if even if he does not have enough experience to run the company. Being an executive director is not a joke. You need to have a lot of experience for that. Understood?
Mhm.
So this is the problem why a chairman cannot be a chair of the committee. Any questions?
No.
Great. So let's come towards the complexities of the remuneration committee. There is no complexity within the remuneration committee, but we are going to discuss what the code says about each committee. There is nothing special about this now. You already have read it once within FPT, nothing new to learn here. In the remuneration committee, for if there is a big company, there must be 3 non-executive directors. If it is small company, then 2 can also be selected. That's it. That is the only complexity here. When we talk about nomination committee, again, if it is a big company, then at least 3 non-executive directors should be a part of nomination committee. If it is a small listed company, then only 2 can also be good. Now, what is a big, what is a small? You don't need to go in that. This won't be asked within the exam. Okay, in exam it would be clearly written whether it is a big company or a small company. So you don't need to worry about it. When we talk about audit committee, now this has a very important complexity that you need to remember. Within audit committee, again, you have the choice that you can have 2. In practical life, there is a choice that you can still have 2 non-executive directors within audit committee. But for F8 syllabus, remember, within the exam, within the F8 syllabus, whenever a question comes, you must always write down there must be three non-executive directors within the audit committee. That is the number one complexity that you need to remember. You must write down. Even if it is a small company, you must write down there must be 3 non-executive directors part of the audit committee. Now, what is the number second complexity that you need to remember? And this is a very important. Audit committee is a committee that is basically responsible for the financial statements that you learn to make within F7. The auditors, it is also, this is the number one thing that they are responsible for. They are also responsible for the auditors, the external auditors who are auditing the company. Okay, they are also important for them. They also have to make decisions for them. Number 3 thing they are responsible for is the internal audit department. The internal audit department we are also going to study within F8, but not right now. Basically, the internal audit department is responsible then for the internal controls that they are on and so forth. Okay? So the internal audit department is also controlled by the audit committee. Understand this.
Wait,
So they
audit
have
committee
to.
controls with departments?
Internal audit department, IA, the internal audit department is controlled by the audit committee themselves. Remember this, right?
Okay.
Now, important thing is this: financial statements, auditors, internal audit, all of these 3 are linked with, let's say, ACCA, right? All of these 3 are linked with ACCA or ICAEW or any other professional qualification, because people from these qualifications move towards these fields. So, and plus all of these fields combined can be said as a financial field. All of these 3 fields combined can be summed up in one word, which is known as financial field. Because again, auditors are looking at the financial statements. The financial statements are prepared. These are also known as financials. Numbers, basically numbers. Even the internal audit is based upon numbers. They also check out the numbers, whether they are correct or not. So these 3 fields deal with the financial side. So you need to at least have one person, a non-executive director within the audit committee that has some experience within the financial field. Either he was an accountant, either he was an auditor in the past, Either he was a part of the internal audit department in the past, but he has left that field. He has so much experience in that field that now he was selected as a non-executive director just so he can be within the audit committee. So it is required by the CCG that there, out of the 3 non-executive directors that are selected for the audit committee, out of these 3, one person must be someone who has financial expertise. One person must be someone who has financial expertise, who must be expert within the financial side, the financial statements, the auditing, the internal audit. He must be expert in these things. Understood?
Mm-hmm.
So these are all the complexities. Now, again, you might say that, sir, if the financial person, if the financial expert person is within the audit committee, can I be a part of the audit committee in the future as well? Well, yes. Why not? Because you will be having experience as an accountant, as an auditor, within the internal audit department, wherever you were, you will have so much experience that one day, one big day, you might get a call and say, sir, we don't have any person within the board in our company who has financial expertise. You will ask why? Because they will say, sir, we have 9 non-executive directors. We are looking for one extra non-executive director. You will ask why? They will say, sir, because our audit committee needs to have, because the CCG says that in audit committee there must be someone who is financial expert. Because you are a financial expert, you have so much knowledge about finances. Why don't you become a non-executive director within our board? Then we will have 10 non-executive director. Out of those 10, you would go with an audit committee and 2 others would also go with an audit committee with you. You might also sit within nomination committee. You might also sit within remuneration committee, but you will be a part of the audit committee because you have financial expertise. This is what the CCG says, that you must have someone who has financial expertise. So that will be your peak of professional experience. Your peak of professional experience when you will be sitting within the audit committee as the non-executive director, and also within the board as well, and you will be making big decisions for the company. Any questions? Any questions?
Oh, I was muted. No.
No. Reply early on. We can't just wait. Okay, reply early on. Okay, let's come. These are basically all the technicalities that you need to have in your mind, at the back of your mind, when studying CCG. Let's come towards the notes now. And remember this. If you want to study from the book, you can. You are allowed to do that. This is chapter number 3. Let me open up the book first of all. Do I have the book open? No, I don't have the book open. So chapter number 3 within your Kaplan study text is all about CCG. If you want to read it, I would just recommend that after the end of today's lecture, just read it once. Do not learn anything from the book. You don't need to learn anything from the book. But you need to learn each and every single thing from the notes that I'm about to give you. There are just 3 pages of these notes. You need to learn everything that is written within these notes, line by line, so you remember it. Why do you need to learn it? Because when we will be doing a question of CCG later on, you will know why we need to learn it. Okay, let's come towards that. What is code of corporate governance? This code tells us how a company is operated. Again, I told you how a company is run because shareholders are not there. This code is mostly used in companies when owners don't run the company, listed companies, or even the banks, or even you can say the insurance companies. They are not run by the owners of. So again, you need to have CCG involved, or a public company. Any company where the owners don't run the company, it can be a family business, but the family is not actually within the business. Then they need to have CCG within the business. And any company that is a public company, again, it means any company that deals with public money. Listed companies, public invest in those companies, so public money is dealt there as well. Banks, public money is sitting within the banks. So even if it is a private bank, but the public company is deposited within the banks, again, you need to have CCG there as well. The third thing, insurance companies. Public takes insurance, hence public is paying to the insurance companies. Even if it is a private company, a private insurance company, but the public money is there, again, you need to have CCG.
I have a question.
Even, yes.
What's a public company? Is it a listed company or?
A public company is any company which deals with the public's money, deals with public's money. Any company that deals with public money. So I was just giving an example of what different types of public companies are. Any company that is listed, who is investing in those companies? All the general public is investing within those companies. Millions and millions of general public, people like you and me, all of my students are investing within those companies. So that company is now dealing with public money, right? So they must have CCG now. Banks, even if it is a private bank, let's say, even if it is a private bank, you own it and you run it from today, but still CCG has to be involved. Why? Because all the people who will be depositing the money within your bank would be the public, the general public, people like me, you, all my students, all my teachers that have gone into heaven. So all of those people would be depositing money within your bank. So you are dealing with public money. Again, you need to have CCG. You can't run the company again. Owners can't run the company in public company. Insurance company is also an example of public company, because insurance company, who takes insurance? Life insurances, car insurances. People like you and me who have car, who are skeptic that my car might end up accidented. I won't have enough money, so I need to have insurance, health insurance. I am paying money to the insurance companies. Now public money is going there as well. So there also needs to be CCG again. Owners can't run the insurance company as well. Let's come towards the fourth example. Very important example. The NGOs, non-governmental organization, like charity organizations. Who is donating money to the charity? People like you and me. The general public is donating money to the charity. There is a very, very big charity known as the Red Cross. The Red Cross.
Mhm.
You know, Red Cross is a private charity. Only a family owns it. But why can't they run that charity? Why? Because the public money is within that charity. Millions on millions upon people are donating money to that charity. So public money is being deposited within that charity. Again, CCG has to be applied there as well. Owners can't run that business. Owners can't run that NGO. Understood?
Mhm.
So any company that is a public company, or the owners themselves don't want to run that company, CCG has to be done. CCG has to be applied. It is a must. Okay. Let's come towards why CCG was required, why CCG was made, the advantages of CCG as well. Greater transparency. When you have CCG involved, the company would be run more, you can say, soundly. The decisions would be taken more properly. The shareholders will get to know what every single decision is being taken within the company. So greater transparency is there. Again, greater accountability. What is meant by accountability? If someone is doing the right thing, hold them accountable. What is being accountable? If they have done the right thing, give them a bonus. If they have done a wrong thing, give them a punishment. This is being accountable. So within the company, everyone is being accountable if there is CCG. If the directors of department, the executive directors don't run the departments correctly, the CEO will punish them. If the CEO is not running the company properly, not handling the executive directors properly, he would be punished by the non-executive directors. If the non-executive directors are doing something improperly, then they would be punished by the shareholders as well. So there is greater accountability under the CCG. Again, efficiency of operations, because now you have an expert person in every single committee. Now you have an expert person in every single running every single department, known as the executive director. So there would be greater efficiency in running the business. Understood? Good decisions would be
Mm.
taken. Bad decisions would not be taken. Again, better able to respond to risk. Again, this is linked with the same experience type of things, because a person who is experienced within HR has been within the nomination committee, so he would know what the risks lie within HR. He would be better able to respond to those risks. He would be better able to make the decisions. Again, the same thing. Again, if we talk about executive director, a person who was experienced in the finance field has been appointed as the chief financial officer, who is also known as the executive director of the finance department. So because he is so much experienced, he
Um,
knows what risks are there within the finance department. He would be better able to
I have
respond to
something to
those
say.
risks. Yes, question please.
The corporate governance helps the NEDs and the directors to run the company.
Come again. Sorry.
Where I said the CCG, it helps the non-executive directors and executive directors to run the company.
Yes. Yes. No. You can't say that. You can't say that.
Okay.
You can say that the CCG makes sure that the company is being run within the best interest of the shareholders. That is the more appropriate definition. Because if CCG wasn't there, the profits would have been gone. Everything would have been
Right.
stolen. So CCG is there to make sure that the company is being run in the best interest of the shareholder. And what is the best interest of shareholder? More profits. Okay.
Okay. Mm-hmm.
That is the correct definition. If you say that the CCG was made to make sure that the non-executives and executives can run the company properly, no, 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 no. That is not the definition. Well, that is another angle of CCG, but the CCG's primary concern, that is the secondary concern of CCG. CCG's primary concern was never to make sure that the non-executives and executives can run the company properly. Its primary aim was to make sure that the company is being run in the best interest of the shareholders themselves. Okay. And the final advantage is less likely to be mismanaged, again, because you have so much layers upon layers, and even the shareholders have control over the company. Even if one person is making a wrong decision, the person above him would punish that person. That's it. These are the advantages of the CCG. That's it. Now, in order to understand CCG, this is a diagram that I made of the CCG, which is within the notes. I think I have made this diagram in front of you. On top, there are shareholders, and through voting they make all the decisions. Even through voting, they select the non-executive directors. The non-executive directors have a chairman of the board, and they select executive directors, CEO, and directors of different departments. They are known as the board. All right. Then the non-executive directors have three types of committee: the audit committee, the nomination committee, and the remuneration committee.
Wait. I have a question.
Yes.
It's like you included the executive directors as part of the board.
No, this is wrong. Apologies for that. This was a mistake within the notes. This is not. Yeah, I was actually going to let you know about it, that this is a mistake. There is another mistake within the notes that I prepared. Within these notes, I will highlight it as well. But this is
Okay.
an error. Only the non-executive directors are known as the board. But why did I include it? Why did I include it? Why did I include it? That is also a question. Because whenever the executive directors have to give answers to the non-executive director, they come to the board, right? They don't make a phone call. They come to the board. They come to the board. You know, within the practical life, whenever you will see that a meeting of the board is being held, there will be 2 or 3 executive directors that would be called upon the board. They will have to tell the non-executive director, this is what you did, this is what I did, this is what I did, I was given this target by you, this is what I did. So that is why I included this, but this was a mistake by me. But always remember, the board is only the non-executive director. But to give answers to the non-executive director, how would you give answer to someone who is above you? You will have to go to his room, right? You will have to go to his office. What is the office of the non-executive director, where they hold the meeting? How do they hold the meeting? The board. So they basically have to go to the board to be answerable. That's it. Understood?
Yes.
Great. Let's come forwards. Now, important points regarding the board themselves. Something that I discussed with you right now. 2/3 majority of entities are on the board. This means the same thing that +1. 2/3 or +1 means the same thing. +1% within the non-executive director. There must be always be +1% within the non-executive director. All right. The second thing is something that I did not tell you, but you need to know about it. What? Executive directors are paid huge salaries because they are running the company. Understood? Now, all the decisions that these executive directors would take, how are the executive directors paid? They are paid huge amount of bonuses. The non-executives would say to the executive director, sir, if you make a profit of $3 billion this year, we are going to pay you $100 million as a bonus. Now, these executive directors are going to do every single thing possible to make sure that they can reach this target of $3 billion mark of profit. They are doing every single thing to make sure that they can reach the profit, right? Am I right now? I am right. Now, what is
Yes.
the disadvantage here? These executive directors are going to make inhumane decisions just to make sure that they can reach this profitability level. Even if they are selling furnitures to make these profits, they are going to make sure that they can cut every single tree in the world just to sell it, by turning into furniture, by turning that tree into furniture, and then making a lot of profits. They, even if they have to sell expired products, they are still going to say, sell it. Why? So that we can make huge amounts of profits. Inhumane decisions are going to be taken. I told you within this lecture that it is a human psychology that if you want to reach your targets and you are really determined to get to it, you have a bonus pending upon it, you will do every single thing possible to reach that target. You need to remember this in your life. So these executive directors, even if they have to make inhumane decisions, they are still going to take those decisions to make sure that we reach those targets. This is the problem. You need to have someone within your company to make sure that inhumane decisions cannot be taken. And how can you make sure that? How can you make sure that that does not happen? That this profitability target can only be made, can only be reached by making only humane decisions. You know, the non-executive directors are never paid any kind of salary. The non-executive directors are never paid any kind of bonuses. The non-executive directors are never given any cars. The non-executive directors are never given any houses by the company. The non-executive directors are not given anything. Nothing is given to the non-executive director. They are just given one thing. That's it. They are given an hourly fee. Every single hour that they give to the company, that they sit within the company, they are paid a fee for that hour, and that fee is not small again. It is a huge fee for every single hour. Let's say one non-executive director would be paid $1,000, or let's say $10,000 at least for 1 hour. It is a huge amount of fee that would be paid to them. But what does this make sure? When one group of people are ready to make inhumane decisions, the group of people who are running the company, they are nowhere linked with the profitability. So now, because they are not linked with profitability, they are given payments based upon time they give to the company. They will give as much time as they can to the company. This makes sure that they are motivated to give more time to the company. Number one thing. Number two, because their salary is not based upon profit, because their bonuses are not paid based upon profit, now they would make sure that whatever profits are made by the company are humane profits, are good profits. They are not black profits. They are not inhumane profits. Why? Because they don't care. We are not paid anything based upon profit, so we should run this company in the best interest of the shareholder. Okay, we have been hired by the shareholder to run this company for them. Okay, we are not paid anything based upon the profits. Great, I understand that. So if the CEOs are making decisions, inhumane decisions to reach profits, we should stop them, because nothing is linked for us by the profits. We are not linked with the profits at all. So we should stop them. We don't have any interest within the profits. We should stop them. Understood? Huh. We should give as much time as to the company, because our fees is based upon our time. Do you understand the concept now? How the things are linked? The CEOs,
Yes.
the executive directors do every single thing to make a lot of profits. So now the company is making a lot of profits. The shareholders' interest is being met. But in order to meet the shareholders' interest, inhumane profits should not be made. The non-executive directors, the neutralizers are present there. They are not linked with the profits at all. If you're not linked with something, you would always try to make sure that that does not happen. You know, all the people, you have seen recent trends in the history. I might be wrong for this. Please, you can say apologies if you get me wrong right now. But all the people that have come out and showed themselves that we are environmental people, they have gone on a lot of strikes and they went upon the roads. They have destroyed the buildings, that you need to care about the environment. You should stop digging out oil from the earth because it is destroying earth. You should stop using petrol cars because it is destroying earth. Why is that the case? Because they are independent. They are not a part of those companies that are digging oil. They are independent. They are not paid anything for that. Whereas the companies who are digging oil, they are making a lot of profits. They are not saying anything about it. Because why? They are dependent upon that oil in order to survive. So you see the concept, the environmentals are now independent. So they are taking an action against it. If there was no person independent, there would be no action taken against it. So the non-executive directors are independent. So they make sure that all the profits are humane profits. Now ask me the question, please. Do you have
No,
any
I
questions?
understand. No, it makes sense. You explained really good.
I speak a lot.
No, I mean, you explained really good.
I did not understand you.
I said you explained very good.
Okay, great, great, great. Thank you. Thank you. Now let's come towards the main part. Obviously, we don't have enough time remaining. The class is more than 1 hour now, I think. So let me check up the recording. I think it is more than 1 hour, and this is the, I don't know. Okay, let's come towards the question now. Let's come towards the main thing. All the points that I have explained, every single point that I have explained up till now is written here. You need to memorize these points. All right, all the points, the most important points. There are a total of 18 different points that I have written down within the next 2 pages of these notes, which I will be sharing, and it will be also within the notes in the lectures. So you should memorize these points. Every single thing that I stated right now, every single thing from there onwards is written here, is written within points, so it is easier for you to learn. Instead of learning paragraphs, I want you to learn points, so you will be able to explain them in your own words, just like I explained right now. You will be able to explain them in your own words within the exam, but you have to learn these points. For example, I said that there must be +1 NED, it is written right here. I said that non-executive directors are paid no salary, it is written here. I said that board has 3 committees. I have said it here. What are the important things that you need to know about the committees? The nomination committee points are stated from here onwards within these notes. Then comes the remuneration committee. The points are written. I have stated here again. The RC heading is written, and then the remuneration committee points are written here. Then the audit committee points are written here. I said that one person must be financially expert. It is written here. Every single thing is written here, so you don't need to worry about it. I want you to learn it, please. Okay.
Cool. Okay.
Great. Now, one point that is wrong and that you should ignore is the point number 17. I don't even remember what did I write. I don't even remember what did I write. It is wrong. No sense it makes. It makes no sense at all. My writing might be wrong in the remaining points, but you will be able to understand. Okay. But ignore this point. Ignore the point number 17. Okay. Every single thing that we have done up till now, before closing today's lecture, I want to do a question with you. I would like to do a question with you. Let me open up my workbook first of all, and let me open up Word so we can do a question. Because you need to have an understanding how you need to attempt a question within the exam. So let me tell you how you have to
Yes,
attempt
we
a
should do
question.
questions.
Yes, we are going to start a question of CCG. Okay, you might have checked the kit till now, and you might be confused. Sir, there is a big story written within the questions. How am I going to understand? Then don't worry, we will move towards it right now. But you need to have an understanding how to do a question of CCG. Let me first of all clear all of these notes so I can download it later on. Let me write down in deep understanding how you have to do questions of CCG. What is the way of doing questions of CCG? You need to understand it. Let me clear it first of all, because I will be downloading these notes, so they should be clean. Okay, I'm going to write down a heading right here within the notes that how to attempt a CCG question. So basic things that you need to have.
Can we do like questions tomorrow, or what do you think?
No. I want to do a question today because there is a homework.
No, I don't mean that. I mean like, no, I don't mean that. I mean like, apart from today, can we do questions on CCG from the book tomorrow?
Okay, if you're not ready for the questions,
No, I don't mean to, no. How many questions are we doing today? One, right? No, I mean
one
like, can
question,
we
one
do?
question, one
No, I
question.
don't mean that. Not to. I'm talking about. I'm talking about
And you
instead
know,
of doing.
only in let me tell you all, in KIT there is only 2 questions available of CCG, just 2 questions,
Oh,
nothing
okay.
more.
Oh, okay. I
And
thought it was like
remember
a
one more
section.
thing, one more thing. We are not going to touch any of the MTQs right now. Once we complete the whole syllabus, only then we will come towards the MTQ. You are not going to
No.
do MCQ
Can we do
for the
that?
next
Can
2
we do that
months.
one MTQ?
No, not at
Oh,
all.
oh my
Not at
god.
all. You know why? Because MTQs are not important. Remember this as a student. Within F8, MTQs are not important. Once you understand how to do the long question, MTQs is the easiest thing to do. Because all the things that we have studied, the same will be asked within MTQ. But for that, you need to be able to understand to do the long questions. If you are able to do
Oh,
the long
okay.
questions, MTQ is nothing.
How many
That is
marks are the
why
long questions?
the
15 or 10?
long questions have 70 marks.
Oh,
MTQs
okay.
only have 30 marks.
Oh, okay, okay, cool, cool.
Okay, we are going to do the MTQs. Don't worry that I am just Gohar sir is going to skip the MTQs. I have paid a lot of fees for that, and Gohar sir is going to say we are not doing any kind of MTQs. No, 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 that is not going to happen. Obviously, we are going to do MCQs that are also known as MTQs. We are going to do that, but we will do them separately all at once at the end of the syllabus. Once we have covered
Okay,
up
sure,
all
no
the
problem.
syllabus, only then we are going to move towards it. Okay, because then
Yeah.
you will remember each and everything.
Yeah,
All
it's
right.
okay. I understand. Yeah.
All right, within the exam, how are you going to solve the CCG question? It is very easy. First of all, you are going to go towards your workbook. Where is my workbook? It is written right here. Okay, let me clear it out. First of all, this is my workbook basically on which I solve all the written type of questions. You, within your F7 exam, you learned how to insert a table within the workbook, right? You go to
Yes.
insert, you go to table, and you are
Mm-hmm.
going to insert a table of 2 by 1 like this. All
Mm-hmm.
right. So first of all, within your answer, you always insert a table like this. Okay. On
Mm-hmm.
one side of the table, you will give a heading of always deficiency. What is meant by the word deficiency? Deficiency is also known as issue. Issue, something that is not correct. It is known as deficiency. You are going to write down deficiency, and on the other hand, you are going to write down recommendation. All right. Now, what are you going to write? So basically, your question will be like this. On one hand, you are going to write down DEFICIENC. Basically, please ignore my spelling. I make a lot of spelling mistakes when I'm writing down. Please just ignore it. You will be able to understand my answers, but I make a lot of spelling mistakes. That is my, you can say, identity by birth, that I make a lot of spelling mistakes while writing. Deficiency, and on the other side, you are going to write down recommendation. All right. And the next thing that you are going to do, by inserting tab, by pressing the tab button, a new cell will also open. So pressing tab, automatically the new
Tab.
cells also open, right? So
Mm-hmm.
you are going to, because the examiner, remember, you are a professional person now, you are studying F8, you are not studying something like class 1. You need to be a professional person. All right. You need to be a very professional person. So what you are going to do is bold it to make sure that these are the headings, to let the examiner know that you are a professional person. Please, presentation is very important within the exams from now onwards. Remember this. So you are going to bold the headings on. And now you are going to come forwards towards the basic thing. You will be given a story within the question, a full 2 or 3 paragraph story. You will go on, start reading the story, and you will identify, just as an example that I gave you, the CFO is also a part of the audit committee. Now, this is an issue you identified. The CCG says that this can't happen. So first of
Oh,
all,
okay.
first thing, you will come within the deficiency tab. You will say, for that one issue we are describing it. This is just one issue. As many issues you identify, you will have to repeat the same process for every single issue. Remember that. We are just talking about this one issue right now. For one issue that you identify, first of all, within the deficiency tab, you will have to write down, explain what the issue is. Explain what the issue is. Now, do not go ahead and write down simply that the CCG says that this should not happen, and the CFO is also the audit committee's part. You can't write that down. You don't need to write that down. You just need to simply explain that according to the given scenario above, the CFO is a part of the CCG, which is wrong. That's it. That's all. You just need to explain in your own words what the issue is. Just explain in your own words, lightly. Just lightly touch the scenario. Okay. The number 2 thing that you are going to do within the deficiency tab for the same issue is explain, if this issue is not resolved, what is going to happen. For every single thing I explained. For example, if CEO is a part of the audit committee, what is going to happen? Because he is also an executive director, he is also a member of the non-executive directors within the audit committee. Now he will be controlling the audit committee, also the finance department. Any issues that he makes within the finance department would not be highlighted by the audit committee, because he is also a part of the audit committee. He would try to make sure that the audit committee does not highlight his own issue, because which department is he a part of? The finance department. He is the leader of the finance department, the
Wait,
executive
can you
director,
repeat what you
the
just
CFO.
said, please?
I said that if the CFO of the company is also a part of the audit committee, what is going to happen? Because he is running the finance department, the audit committee is also responsible for the financial sides of things. So they are also responsible for everything financial that the finance department does. The financial statements are prepared by the finance department, but the audit committee is responsible for them. So any issues that he makes within the finance department, within the financial statements, within the finance department, he would try to hide them within the audit committee. He would try to make sure that even if the other two people identify them, he would try to make sure that, oh, don't say that in front of the board, don't do this, don't do this. This is something that will happen if the CFO is part of the audit committee. Now, this is what is going to happen. Explain what will happen. What will happen if the thing is not corrected? Let me please write it clearly. Explain, number one point is explain what the issue is. Then in your own words, lightly in your own words. Number two, explain what will be the consequence of that issue if it is not resolved. Consequence of issue if it is not resolved. If it is not resolved. What is going to happen, or what is the consequence if that issue is not resolved? Remember, we have not talked about the CCG, whether the CCG says it is correct, whether the CCG says it is wrong. All right, we have not talked about that. This is the deficiency part done for one single issue that you identified. Now let's come towards the recommendation part. What is meant by the word recommendation? When you have identified that there is something wrong and you have to recommend what is the correct way to do it. And what is the correct way to do something? The CCG has told you. Now, first thing that you do within the recommendation portion is that you write down that it is wrong because the CCG says this. The CCG says, for example, if a CFO is part of the audit committee, the CCG says that an executive director cannot be a part of any any committee of the board. An executive director cannot be a part of it. You just need to write this down. That's it. Okay, this is what the CCG says. Now, write down what is the correct way to do. What was the correct way to do audit committee? What were the correct type of people? You now have to give a proper recommendation, an expert recommendation, an expert professional recommendation. Is that something you have to provide? For this issue, what is the correct recommendation, Umi, that you will give? I need an answer from you. What is the correct recommendation that you would state that how this should be done? Now explain. You have to write down how it should be done. How it should be done in light of CCG. In light of CCG. How? Explain it to me. Give me an answer for this issue that I raised, that CFO is part of the audit committee. Give me an explanation.
The CFO should be kept separate from the non-executive directors because he's part of the running of the company. So one of the non-executive directors should be elected as part of the audit committee. One of the other ones.
Good, great. The greatest answer that I could imagine. Great answer. You just did not say that because I was expecting you would only say that the CCG says that executive directors, who is the CEO, should not be a part of the non-executive directors audit committee, so he should be removed from the audit committee. And you would only say this, and then you end your answer. No, you also went ahead and said what is the correct way to do it. You also said that. You said that only the my answer would have been, the second part would have been, only the non-executive directors can be a part of any committees that the board made. An audit committee is part of the board, hence only the non-executive directors should be allowed to be a part of the audit committee. Okay, that I would not have ended my answer there. I would also have said additionally, the CCG also says that, because the question within my mind is very simple right now. The CFO is a financial expert. The CFO is a financial expert. So it might be a case that they would have kept the CEO with an audit committee because he's a financial expert. So maybe they might miss out and not have a financial expert within the board now. So I would say, whereas the board should also make sure by following the CCG that Another person who is a financial expert should be hired as a non-executive director and placed upon the audit committee as a non-executive director, and he should not be any executive director from the company. This is what my recommendation would have been, the correct way to do. Understood?
Yes.
Great. Any questions?
No.
Great. Remember, if you have any questions, I'm always available on WhatsApp to resolve any questions. Remember that. The number two thing,
Okay.
obviously, today has been so much. I want you to learn the above things. Then I want you to learn how to solve a question of CCG. You don't actually need to solve a question of CCG. Apologies for the background noise if you are hearing any, but you don't need to solve the question of CCG. We are going to solve one question of CCG tomorrow, right?
Okay.
And one question will be given to you guys as a homework, which you will need to solve and share it with me so I can review it. Understood? So,
Okay.
what is the basic thing that you need to do? Read the book, the chapter from the book. If you want to read it, it is upon you. If you don't want to read
I
it,
will read
it's
it.
okay. You can't. You don't want to read it, you don't need to read. Because every single thing that comes within the exam, I have covered it here. All right. You need to learn the points that I have stated within these notes, and then you need to learn how to solve a CCG question, which is very important. Okay.
Mm-hmm.
That's it
Okay.
for today. That's it for today's lecture. And remember, if you have any questions, I'm always available on WhatsApp to resolve any kind of issues that you have. Thank you so much for
Okay.
today's lecture. And
Okay.
that's a very
Thank
good
you.
night.
Thank you. Bye.